Hey everyone, Justin Conroy, Financial Dad here, and today I want to talk about the difference between a tax credit and a tax deduction. This should be a relatively quick video and explanation, so do me a big favor and smash the like button for the YouTube algorithm, and let's get this started. The first major difference in tax credits and tax deductions is when they actually matter as part of the overall tax calculation. Let me explain. When you're doing your taxes every year, you may have never noticed before, but it's actually laid out very logically. First, you look at your gross income. This is where you start. Then you make your income adjustments for things like retirement account contributions, HSA contributions, among others. This gives you your adjusted gross income. Then you take your tax deductions. This is important because these deductions are literally deductions from your adjusted gross income, which results in your taxable income. So let's pause there and say it a little bit differently. Your tax obligation is calculated based on your taxable income. And that taxable income is basically your gross income minus your adjustments minus your deductions. So your deductions are a way to reduce your taxable income. Does that make sense? Let's move on. Once your taxable income is calculated, you then calculate your total taxes owed. This is your tax bill. This is what you owe the government. Almost, because this is where the tax credits come in. You calculate your tax bill and subtract any tax credits that you're eligible for. These are things like earned income tax credits, child and dependent care tax credits, lifetime learning credits, and others. So a tax deduction is a deduction of money from your taxable income, while a tax credit is a reduction of the tax owed. So which is better? Well, as it turns out, in most situations, a tax credit will be better than a tax deduction. But let's look at an example. Let's say that you make $100,000 per year and you've got a way to get $15,000 towards your tax calculation. On the left, we can see where that $15,000 gets applied as a deduction. So we take our $100,000 gross income, subtract our $15,000 deduction, and we get our taxable income. I'm assuming no adjustments in this example for simplicity. So our taxable income is $85,000 after the deduction. Then we apply our tax rate, which again for simplicity, I'm just using a flat rate. This gets our calculated tax bill of $18,700 that we owe to the IRS. On the right, we've basically got the same thing, except that instead of using the $15,000 as a tax deduction, we're using it as a tax credit. You can see that initially our calculated tax bill was higher, of course, but because the tax credit is just a raw cut from the tax bill, the $15,000 goes a lot further, resulting in a final bill payment to the IRS of $7,000. One more important thing to know. Tax credits come in two types. Some are refundable and some are non-refundable. For example, earned income tax credit is refundable. So let's say you're eligible for the tax credit, but your tax bill is super small, like $2,000. But your earned income tax credit is about $3,500. That means you'll get a refund of $1,500. Just be careful though, because some tax credits are not refundable. So if, for example, you were eligible for a non-refundable credit of $3,500, but your tax bill was only $2,000, you wouldn't get a refund of $1,500, you would just owe $0 in taxes. Well, there you go, short and simple. But hey, if you made it this far in the video and found some sort of value in it, whether it be entertainment or education, be sure and smash the like button for the YouTube algorithm. Smashing that like button lets YouTube know that you enjoyed this content, and they use that data to help decide if they should push this video to more people, so it really does help this channel grow. Also, I make videos about money management, wealth building, and personal finance every week, so be sure and subscribe down below for more content if you haven't already. Also, if you're new to personal finance and need a beginner's crash course, be sure to check out the video on the screen right now, because it will cover the basics that you need to know and will help you get on your path towards wealth. Thanks for watching, and we'll see you next time.